talking with Sean Evers of the Gulf Intelligence and talking about the role of energy markets in the Middle East and energy markets in Dubai. When it comes to trading oil and oil prices, we basically take what we're given either from NYMEX in New York or ICE in London, Brent crude WTI, but increasingly there are moves to try and create a benchmark here in Dubai. You talked of East of Suez, and the Dubai Mercantile Exchange with its Oman contract is 5 years old. They've got a new chief executive. You said focusing eastwards. Chris Fick speaks Mandarin and Russian. I read from his biography. The chairman of Dubai Mercantile Exchange, Ahmed Sharaf, has been talking and giving interviews saying their focus is very much turning east. And I was looking at some of the numbers for the trading of the Dubai Mercantile Exchange contract versus the NYMEX or London, the ICE exchange. And whenever I've done this before, when we've had someone from DME in, it's always been just in completely stratospheric leagues. You've got London and New York, which is up in the clouds, and then tiny little volumes here in Dubai. But when I crunch the numbers today, actually Dubai is certainly nowhere near London and New York, but it's almost in the same ballpark. In rough terms, 700,000 contracts, Brent contracts traded in London a month at the moment, at 600,000 in New York, and about 140,000 in Dubai, which isn't stratospherically different, I guess, Sean, is it? Are we getting there? Are we catching up?
I think it's the volumes are obviously still a long way to go, but I think the key is really to, and I think you'll start to see a shift in DME strategy. You know, a lot of the focus over the last 5 years, the solution to becoming relevant was seen as getting the principal oil producers of the region to price off of the DME contract. So Saudi Aramco and Abu Dhabi and so on would use the Dubai Mercantile Exchange as a reference in order to price their oil. That was always seen as the holy grail, and until then the Dubai Mercantile Exchange would not be relevant. But I think there's a new strategy now with the new management and the sort of second 5-year outlook, and that's really to to become a much more diverse in being relevant to a lot more people, rather than simply being relevant to those who price their oil, like Saudi Aramco, as we mentioned, but to be relevant to, let's say, banks and others who need to who lend and utilize the opportunity to utilize the DME in buying futures contracts as a form of hedging, as another form of cheaper financing, and sort of bringing it into having multiple purposes to a much greater number of people, to the customers of Saudi Aramco and Abu Dhabi and China and Korea, how they could use the DME in a way to minimize risk and hedging and so on as a tool. So I think the logic going forward is to get a little bit, back to basics, down to the ground, and look at much more smaller incremental development for the DME, and that involves not necessarily keeping an eye on the clock of how many contracts are sold, but how many players are actually using the DME and for what multitude of purposes. That's really the growth going forward, I think, with the new management team, and I think it's a very sensible one.
I mean, they've got strong backers, haven't they? CME, Chicago Mercantile Exchange Group, now owns 50% of it, and they're clearly a very big player from the United States in this. And then in terms of the people who do trade on this, partners include Shell, Goldman Sachs, Morgan Stanley, Concord Energy. These guys have a stake in it. The likes of Vitol, heavily involved in DME. So they have got some big boys interested.
They do, and I think generally the global narrative, if you like, is playing in their favour. They don't. I think they could get down to basics and leave the drum beating to the global narrative. And what I mean by that is just as you said earlier, the whole shift of west to east, that very, very large narrative that is in multiple different places, that plays into the favor of DME. The big narrative, global narrative of greater transparency, that plays into the argument of you should trade on an exchange, on a futures exchange, where the price point is transparent and there is liquidity and there's a paper trail and so on, rather than a kind of slightly mercurial off exchange pricing that generally the some would argue Brent is priced in a very sort of untransparent way, not necessarily always reflective of a deep pool of liquidity and so on. So the global narrative of greater transparency and liquidity and pushing on to the futures exchange is playing in DME's favor. And these moving eastward, moving to greater transparency, will eventually force more and more people onto a futures exchange rather than trading over the counter.
Of course, DME isn't the only commodities futures exchange here in Dubai. We've got the DGCX as well. But in terms of a viable contract that the energy industry is going to take seriously within the region, not just Dubai, is DME really the game? Is that our big hope, or are there others out there as well?
With all of the respect to the Dubai Multiple Commodity Centre, they're trading a contract that's actually a derivative of WTI, so they're not even creating a new contract. But I do think at the end of the day, if there's realization in the new Dubai after the sort of the boom years and the crash and the sober day after hangover, is we can't have two of everything. The logic of the sort of Emaar and Nakheel compete against each other and we get a better product, or the DME competes against the Dubai Multiple Commodity Centre and we get a better product, and so on. I don't think there's logic in that. I mean, we see it in the stock markets. There's not enough liquidity or depth in the markets. They need to merge. We need to rally around singular, trophy, crucial infrastructure projects that are like the DME, like whatever stock exchange you want to pick at, and so on, and not think that we can be, for whatever reasons we might think it, that we can support multiple versions of the same thing. I think in the new Dubai you'll see more, sober thought around those things, which is probably more sensible and more successful.
Well, let's hope that logic extends to the radio industry. The last thing I want is a strong competing talk news radio station. Sean Evers, managing partner.
Coast Dubai, or whatever it's called, might be coming up on the inside.
Sean Evers, managing partner of Gulf Intelligence. Thanks very much indeed for your time.
Cheers, Richard.